Okay, hi. So today we'll learn Module 11 for short-run decision making in relevant costing. So what is relevant costing? It's a term actually to describe avoidable costs that actually are incurred only when making specific business decision. So in business, we're going to make decision, right? And no matter it's a small decision, a short-term decision, or long-term decision, decisions still need to be made, and sometimes short-term decision can affect your long-term plan for your company. So even if it's short run and short term, they can affect long-term planning. So this is why we need to learn this relevant costing. And it's also the cost that can be eliminated due to like some decision making that you need to make. Okay, so usually it's called as avoidable cost. So that is yeah, any cost that are relevant to make a decision. So remember that you when you want to make a decision, this is why you need relevant costing to see either it's relevant or not. Okay, so without further ado, let's get started to the problem and see what we can learn from this problem. Okay, so for the first one, in problem one, we can see that we are learning the keep or drop product segment. So this in this problem, we're going to learn either we need to keep this product or we should drop it. Okay, so for the first one, shown below is a segmented income statement for Jim Juice Company's flavored milk. So they produce milk, and we have the sales revenue for avocado, strawberry, orange, and the total overall. And right here, it has said that the orange juice line has a contribution margin of 100,000 stated here, sales of 600,000, 650,000 minus total variable cost of 550,000, which is stated here as well. And all variable costs are relevant. Relevant fixed costs associated with this line include a 50,000 of machine rent and 50,000, 55,000 of supervision salaries. And if you are asking why depreciation is not included, depreciation will still go into your expenses even if you don't do your what is called you don't produce this, okay? Because depreciation for machine will still go on because your machine, yeah, it still go on, or depreciation on other things, your rent, your whatever that is, your depreciation will still go on. That's why it's not included here. Okay, so the requirement is to list the alternatives being considered with respect to the orange juice product line. So what is the alternative for this orange juice product line? The second one is to list the relevant benefits and costs for each alternative. And the third one is which alternative is more cost effective and by how much if it's more effective. For the first one, since we're learning about keep and drop product segment, and right here we have the alternatives with Orange's product line. That means we only have two alternatives here, which is keep or drop. So as simple as that. Keep or drop the orange juice product line. Okay, so this is it. Okay, and the second one, list the relevant benefits and cost for each alternative. Okay, so what if you keep it and um what if you drop it? Okay, so if the relevant benefit of keeping orange juice will include all of your sales and stuff, but right here we can see that the relevant benefit of keeping the line is uh include gross revenue of 650K. Um, we can say The relevant benefit of keeping the line includes segment margin of $40,000. So this is dropping because it's a loss. The relevant benefit of dropping the line includes sec the line is reducing loss segment margin of 40K. Okay, and keeping it have no effect. Keeping the line uh, gives no relevant. Okay, so here it is. Okay, wait. Okay, the next one is I guess I can do it one more time. Yep. Okay. So number three is which alternative is more cost effective? Okay, right here we have drop, keep, and the difference. So right here we will see how much they cost. So first one is sales revenue minus with variable expenses, and then we have contribution margin. We have machine rent, and then we have supervision. And if you're asking why the depreciation is not going there, because you are going to use the depreciation either you produce it or not. Okay. So what if we drop the orange line? Then we don't have all of this. What if we keep all of the orange line? So we still have 650,000 of sales revenue. So we're going to put in this one. 550,000 of variable expenses. And then machine rent is 50K, supervision 55K, and we get the total of minus 5,000. Okay, so we lost 5,000. So the difference is basically you just need to minus all of them, drag it down, and yeah, the difference is must be the same. So we lost by 5,000. So it is more cost effective by dropping the line, the orange juice line, because of due to the loss due to the loss of 5,000. Okay, so this is the answer. It's more cost effective by dropping the oranges line because you will lose 5,000 every month or every time you produce it. So it's not a deal. It's not a good deal. So let's just drop it. Okay, so that's for problem one. Continue to problem two. Still in the keep of drop segment, but for the subsequent issues, and refer to question one for the details provided. Assuming that dropping the orange would reduce sales of avocado by 10% and sales of strawberry lime by 5%, and all other information remains the same. So requirement is if the oranges drop, what is the contribution margin for the avocado and strawberry? And number two is which alternative keep or drop orange is now more cost effective and by how much? Okay, let's continue to number two. Okay, so the contribution margin, they said that the first one is we need to find the contribution margin, right? So the first one is we need to find the contribution margin. So contribution margin for the avocado and the strawberry. So let's go and see. Contribution margin for avocado and strawberry in the beginning is 300 and 350. So contribution margin is 300 and 350. And the total is 650. And right now, they said that by dropping the orange would give them by dropping the orange would give them effect of reducing the sales. So the new contribution margin or new CM is avocado will reduce by 10%. So we times it by 90%. Okay, because it's 100% and now drop 10%, we get it into 90% only. And then for strawberry, drop it by 5%, so become 95%. Okay, and then we add it and we get 602,500. So it's dropped by 47,500. Okay. Yep. Okay. Next, number two. Which alternative keep or drop? Okay, so do we need to keep it or do we need to drop it? Since the sales and variables, the variables is still remains the same, we will continue from the contribution margin. So contribution margin, I'll just write it. New contribution margin. Meanwhile, your machine run will still go on and you need to count it with your supervision. And we get the segment margin. So if I drop it, my new one is this. Contribution margin. Because you're not going to use the, if you drop it, okay, you will have this. But if you keep it, you will have contribution margin of this total, 750K. Okay, so 750K. The difference is continue. Machine run, if you drop it, they will be 15 plus 25. So 15 plus 25. If you keep it, it will be 90,000. Sorry, this is minus 90. Okay, for supervision, if you keep it, if you drop it, 35 plus 20, 35 plus 20. Meanwhile, if you keep it, you will have 110. So minus 110. And yeah, we just need to add 3 of this and see. Okay, and we have the result. If we drop it, our income, our margin will be 507. Meanwhile, if we keep it, it's much more. So the difference is positive. So which alternative is more cost effective? So right now, income will wait, Jim juice will generate more margin by 42,500 if they keep the orange line. Will generate 42,500 more margin by keep shipping the origin. Okay, and it's done for problem 11 too. It's easy, right? And then go problem 3. Yulin Manufacturing has always made its components in-house, and however, Travis Component Works had recently offered to supply one component, A1, at a price of $30 each. Travis users made 10,000 units of component A1 each year. The cost per unit of these components is as follows. We have this all, and the fixed overhead is an allocated expense. None of it will be eliminated if the production of component A1 is stopped. So the requirement is, what are the alternatives facing John Manufacturing? Sorry, it's Yulin Manufacturing. Uh, respect to production of component A1, and which alternative is more cost effective and by how much? So the alternative they will face is either make or buy. So this make or buy decision. Should they make it by themselves, or should they just buy it from Travis? Sorry, from Travis component. So this is what we need to do. The first one is we need to count first. So if we make it, we need what? Direct materials. Second one is direct labor. One is variable overhead. And remember that it's stated here that the fixed overhead is an allocated expense. And none of the fixed overhead would be eliminated if the production of component A1 stopped. So the fixed overhead doesn't have any effect on that. So direct materials, $12 times with 10,000 unit. Okay, because they use 10,000 units. This is cost per unit for this. So we need to calculate first. Direct labor is $7 per unit, so we produce 10,000 units. So we need to calculate that. And the variable overhead is $5 per unit. And we get this total for the total relevant cost, which is this much. What if we buy? So what if we buy? It will be our purchase cost. They say that Travis Component Works had recently offered to supply one component A1 at a price of 30 each. So if you buy 30 each, 10,000 units, it will be 300,000. Okay, so the difference is 300,000 minus 200. Okay, so the difference is this. Okay, and which one is more effective? So we can say that Ulim Manufacturing should stick to make the components by themselves as it's cheaper by $60,000. Okay, this is the answer. Okay, then we will continue to problem 4. This is for sell at split off or further product processing. So it's should we sell it at split off, or should we process the product further than that? Okay, so the first one is we need to see John Inc. They manufactures two products from a joint production process. The joint process costs the joint process they cost 350,000 and yields 10,000 pounds of LTE compound and 40,000 pounds of HS compound. And LTE they can be sold at split off for $75 per pound. Okay. Meanwhile, HS can be sold at split off for $30 per pound. A buyer of HS uh, asked John Ing to process the HS further into the CS compound. If HS will process further. Okay, so what if it's processed further? They will cost 70,000 to turn 50,000 pounds of HS into 10,000 pounds of CS. And the CS would sell for $90 per pound. Okay, you might think like, okay, this is way too much information at once, but don't be afraid. This is easy. Okay, let's just say the requirement first. The first one is, what is the contribution to income by selling 35,000 pounds of HS at split off? What is the contribution income? So in order to find the contribution income, it's as easy as contribution income at split selling at split. Okay. So right here we can see that HS sold at split off for $30 per pound. So we just need to take $30 times with they're selling 35,000 and we get 1,050,000. Okay, this is the amount that we will get if we sell it at split off. Number two, what is the contribution to income from processing the 50,000 pounds of HS into 10,000 pounds of CS? And should Jet continue to sell the HS at split off or should they process it? So as simple as this, when you say the further processing, okay, so the revenue, we need to see first, what is the revenue from further processing? So from further processing, the revenue will be, right now we can see, just now you can see, if they are processed further, it will cost $70 to turn the HS into CS, and the CS would sell into $90 per pound. So $90 per pound times the CS is 10,000 pounds. So 10,000 pounds. This is the amount of revenue that we can get. Okay, and now we will continue to see, okay, the further processing cost. Okay, the further processing cost, they said that it will cost $70,000 to turn 50 pounds to 10,000 pounds. So you can directly write it's $70,000. Okay, wait for a minute. Okay, so continue. Okay, and this we can write the income from further processing cost. Income from further processing, we can say that it's 90,000 minus 70,000. Okay, so the income is only 830, and that's why um sorry, and that's why we can say if they sell it at the split off, it will be more profitable. So should John continue to sell or process? We can say that John John Ing should sell HS at split off because it generates more income by, okay, let's calculate it, by $220. Okay, which we got from, yep. Okay, and this is the final for problem 11 and we're done for our chapter. And yep, thank you for watching this video and good luck for your exams.